What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. And I'm your host, Dwayne Stein, that's right, the Gulf South Mortgage Authority. And this is your home show where for 10 plus years we've been providing education and options on what is or will be your largest investment and most valuable asset, your home. If you're new to the show, welcome. Glad to have you here as part of the Gumbo Nation. We think you're going to enjoy it. If you want to join the show live, 504-260-0995, or you could shoot an email to info@mortgagegumbo.com. Loving it, man. I tell you what, the show, get excited, love doing this. Multiple reasons. Love providing the education options. Love helping, my community and not just my community, but man, we're Mortgage Gumbo's becoming a fan of the truckers. I tell you, we're must have a lot of folks running through this I-10 corridor, picking up the show. The podcast is growing. Doing some loans in some other states from a few truckers, oddly enough, over the last couple weeks that have heard the show calling. So helping some folks in Missouri, got one that's in Idaho. Who knew they had houses in Idaho? Just joking. But and then several, obviously, in Florida and Orange Beach. So good stuff there. So, hey, maybe we are going to become not worldwide, but maybe Mr. Nationwide. So we might have to change that Gulf South Mortgage Authority to just straight up U.S. Mortgage Authority. So, again, if you want to join the show, 504-260-0995 or shoot an email to info@mortgagegumbo.com. On the show today, going to be talking about, are you ready to become a real estate investor? Are you? Because it's not that hard, and we're going to explain a program that will allow you to be able to take advantage very easily. We're going to go over the pros and cons of what is called a DSCR loan. DSCR, Debt Services Coverage Ratio. Debt Services Coverage Ratio. It's basically a cash flow loan. And when you hear what we can do, a lot of you are going to go, my gosh, I've got to look into this. So we're going to discuss that. Also, we talk about crystal ball. We try to help you here on Mortgage Gumbo. We're very data-driven. We try to stay away from headlines or clickbait, right? Well, what we're going to talk about today, I'm going to give you a look back on appreciation and why owning a home is great, has been great, and will continue to be great. So we're going to do a look back on what appreciation has done and the benefits of that as well. So hope everybody had a great Mardi Gras. Wow, it's been a great couple weeks here for the city. Kudos, cheers, New Orleans. Way to go. Proud of you. Hand claps, golf claps, all that kind of good stuff. Way to go. And it's only getting better. Hey, we're heading into, as it heats up a little bit, that grass starts to turn green, we get the festivals. And look, now this weekend got already, as if you didn't get enough parades. I mean, Mardi Gras is so late this year. Now we're getting right into St. Patrick's Day. So how amazing is that, right? So now you got St. Patrick's Day parades coming up over the next couple weeks. So good times for sure. Little PSA for you. Do not, or remember at least, and now I guess these days, your phones do it for you, but spring forward. So today, everything springs forward. So for many of you, I can remember, there'll be somebody at church tomorrow that'll, you'll be there early. Look at it this way. See, in the fall, you show up late. Hey, you'll be there early so you can hang out and get an extra couple prayers in to the Almighty as we have daylight savings time. What's your thoughts on that? I know Trump got asked that this week, and he said it's kind of a 50-50 thing. I'm all about more daylight myself. Just allows more activity. I'm sure a lot of working professionals as well would like that, able to get home, get some things done around the house, and maybe not have to wait till the weekends and stuff like that. And I think it would just open up and maybe all around just make folks just feel so much better. But who knows? I know that's been a debate forever, and some states don't recognize it. Arizona, there's a couple other ones that do not recognize it. So anyway, got that. So that happens tonight. So and then for you party goers who maybe church isn't an option in the morning, one less hour of partying. That's all that's going to mean. The bar's going to shut down a little hour earlier on you tonight. So look, lots been going on last week. Did a little best of, a little repeat. But lots have been going on, and we're going to get into rate watch. The trend is our friend right now. I like what we're seeing. We told you this is not going to be some free-for-all, but it's a roller coaster. And right now, I like the trend we're on. Right, we're kind of at the top of that hill and starting our free-for-all. We're not free-for-all, but starting a downward trend, which we like anytime it comes to interest rates. And that's why I could tell you there's a lot of excitement. A lot of activity is picking up. A lot of activity. Refinances are up 83% year over year. So what does that tell you, right? I mean, if you're sitting there going, I don't know, 83% of people right now, or at least activity up 83%, that's a lot. And we're seeing that. And the amount of savings that we're doing for folks is amazing as well. And let's say, look, maybe you have, that low rate and the refinance, you want to hang on to that, but maybe you want to look at until the rates get a little bit lower. Let me know. We've got our Express Equity loan where we'll leave that first mortgage rate alone, right? We've got some options for you there. And, it's whether it's a fixed rate second, a little bit of a spin on what a HELOC is, there's some options there so you can get this debt taken care of. The beauty of our program is it's all AI-based, and you get to pick your terms. How great is that? You pick what you want. Do you want a 15-year? What rate do you want? You get to choose all that. So that's a popular program that we've got here at Mortgage Gumbo right now. So, hey, if you like that 4%, but you're or less, and you're like, look, there's really some things that I need. Usually it's up to about 50, 60 grand. After that, usually a traditional refinance, depending on what we're paying off, is going to be much more worth it. But that's what we look at for you. And that's why we have SnapSend and Save.com. That's why we've got MortgageGumbo.com. We've always got somebody on standby. We've always got somebody there ready to help, ready to try, and make sure that we can get you the answers that you need. Okay? So lots and lots of good stuff. Home away from the show, mortgagegumbo.com. Go to all the social sites, blah, 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 all that fun stuff. Day jobs, 504-207-7600. All right, got the do's and don'ts out the way. So let's kind of talk briefly about jobs report came out yesterday, and we told you, and this was the BLS report, remove the L, BLS, remove the L, what do you have, BS? That's usually what this report is. Well, guess what now? You get some new folks in play, and all of a sudden some of this reporting, they're still trying to manipulate some stuff, though. Don't get me wrong, but they were expecting 170,000 jobs. It came in at 151,000, so a little bit more weaknesses. But, my big thing when I look at this, folks, is, and this is what, what we're looking at that's got to help, because and that is small businesses. Small businesses are still suffering. Small businesses haven't been able to get off the mat yet, right, if they've survived. Aren't able to, get out there. The business isn't where it needs to be able to produce because of cost, because of what everything is costing. So when you look at small business hiring, that's still down. Medium and large companies, you're starting to see some improvements there, okay? But let's face it, small businesses is where we need. That's what we want. That's you and I and a lot of the local folks that we want to make, those local stores and hardware and stuff like that. That's what we're working on, and that's what we've got to start to see improve, not just the large and medium-sized businesses. So let's kind of talk about this, and this is average hours worked. is 34.1. I found this pretty unique stat, and this is at 15-year lows, that the average hours worked is 34.1 hours. But here's why. Full-time jobs lost, 1.2 million. Part-time jobs was a gain of 610,000. So you've got more part-time, so that's less hours worked. So it doesn't mean if you're full-time, but what you're seeing is you're seeing a lot more part-time hiring than you are full-time. And they do these household surveys, which I kind of am more in more favor of household surveys because somebody actually picks up a phone and has to answer a question. And with the household surveys this week for the month of February, they showed a loss of 588,000 jobs, okay, in a household survey, right? So think about that, 588,000, but listen to this. Ages 16 to 19, there was an increase of 80,000 jobs. Ages 20 plus was a loss of 666,000. So you see where they come up with the negative 588. Gumbo Nation, I think we all can agree. I don't think our 16 and 19-year-olds, that's not exactly our strongest earners out there. So they've got to start getting some of this stuff fixed. They've got to start how they report some of this. And, you know, at the end of the day, the unemployment number actually went up. And reason I say this, we don't want everybody to be unemployed. But I've been telling you for years, the canary in the coal mine is the unemployment rate. And when you're looking at this and then manipulating all these job numbers, the facts are starting to come in. And unemployment, amazingly, the first report under the new regime, well, unemployment went up, right, from 4 to 4.1. So, and the reason why when I talk about that, that's important is when you start hearing about Powell with the one rate cut, right, and this guy's an absolute, I mean, he's a cancer. I don't understand how he has any value based on what he's done over the last 5 years, 4 years being wrong about everything, but people listen. And yesterday he got on there, and this is why I listen so you don't have to. He gets on there going, hey, we think the economy's thriving. We're not sure of this. We're not sure if we're going to have to make cuts. You know, we're still thinking maybe one cut, yet the market's now pricing in because the market's starting to finally understand what's going on. They can see 3 rate cuts now over the course of the year. And the reason why that is that's going to help out, right? What are those rate cuts going to do? Those rate cuts, the federal funds rate, those rate cuts are your short-term rates. That's your student loans. That is your credit cards, right? That's your savings, stuff like that is what that has to deal with. So as that gets cut back, then obviously you're able to save more money if you're not paying as much on your student loans. If you're not paying as much on your credit cards, that's going to help there, which then does what? That'll help buying. They're just trying to make sure that people don't go off the rails, all the spending. I think that's going to go away as you could start to see with Doge and all these things going on. You know, just all this spending. It's amazing when you listen to the State of the Union what all these monies we're going to that you and I as taxpayers have been putting into, and you wonder why the economy's sort of in a spot where you go, my gosh, what's happening to all the tax dollars, and we're not keeping it here helping ourselves. When you hear about all these billions and trillions of dollars, I think we'll start to see, as that starts to get regulated a little bit more, we're going to start to see even more benefits, especially when it starts coming to the housing market. And that's kind of what we're talking about, and it's kind of a perfect storm as we head into the spring home buying season. So stick around. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you want to join the show, 504-260-0995. Don't go anywhere. If you do, I'll just come find you. So hang around. We'll be right back on the other side of the break. Welcome back. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. All right, still to come on the show, we're going to be talking about DSCR. DSCR, Debt Services Coverage Ratio. You're not going to want to miss this as we move forward. Basically, if you're listening to this, we're going to teach you how to become a real estate mogul, an absolute real estate mogul, and also we're going to have Rate Watch. Hey, another stat that came out this week, which is, and I'm starting to see it a lot, and I feel for many folks out there with student loans. Look, for the last 4 or 5 years, you've been told, hey, don't worry about student loans, don't worry about student loans. Well, now they're starting to report them. And unfortunately, they start reporting, and guess what? There's not many folks out there who over the last 4 years, when they were told don't worry about student loans and they were being deferred, understood what that concept meant and understood that eventually, you know, if it wasn't paid off, you were going to have to actually start making payments. And right now, it's 20%, 1 out of 5. It's actually a little bit over 20%. 1 out of 5 folks with student loans are not 1 day, not 30 days, not 45, not 60, not 75, but 1 out of 5 folks with student loans are 90 days past due. And I am seeing that when it comes to loans. I'm seeing it on credit bureaus, so it's having an effect on naturally credit scores. But what it really does when you're looking at student loans is, depending on what loan program, we can normally charge either a half a or have to not charge, but have to qualify you using, say, you've got $1,000 in student loans, for example. Well, we can do a 0.5%, so it's $50, right? On some programs, and other ones are 1%, so $100. Well, when you go past due and it gets reported in derogatory, unless you bring it current, then we've got to charge 5%. So that went from charging you, qualifying you with $50 a month on that $1,000 to that's $500. So that makes a tremendous difference when you are looking at everything that is going on for qualifying. So, folks, those student loans, look, I know a lot of you were led to believe, hey, this is going to go away. I'm not going to have to pay this. Get an eye on these things. Get with the folks. Try to find out what is going on and make sure that you are getting these things paid, especially as we move forward. And look, we can help you with it. We can kind of show you what to do that as you move forward with purchasing a home. So that was a stat I saw this week that was a little bit, just painful really to painful to see. So, all right. So, look, we love to have a crystal ball here. We do our best. We've told you for years, especially over the last 2.5 years. We've been telling you, look, we're gonna steer this ship for you at Mortgage Gumbo. I've been doing this for 30 years. I've been through choppy waters. I've seen it all, right? And lent through all these different scenarios. And so we try to help keep you afloat and keep you on the right path, whether it's credit, down payment, loan programs, whatever it takes to make sure that you can succeed. Well, what I also like to do is kind of show the benefits of home ownership, right? Because I get some of you going, dude, you could preach to you blue in the face. I'm not buying with rates until they hit 6%. I hear that. That's the number. You go out and you see people and they're like, oh, we want 6%. Hey, that's fine. That's fine. But what you're going to see is you're going to pay more. You're going to, and I can tell you by the activity, folks are finally understanding the benefits of getting off the sideline. But we did a 10-year look back. So if you go back to 2015 through 2024, 10-year look back, your house, your cumulative appreciation on your house from 2015 is 94%. Folks, that's almost double. If you go back to last year, was 95%. In 2023, It is a tad misleading because we had the pandemic, right? But in 2023, you made your values over more than doubled. That's why so many people, again, were refinancing. So all these people that their equity has doubled, do you think now they're just going to give that house away to you while you're waiting for 6%? No. In 2022, 106%. And then listen, before the pandemic, 67%. You go, oh, that's a huge drop-off. Folks, that's your house appreciated half. That's amazing. That's amazing. So the benefits of home ownership are real, and we can share those numbers and show you those numbers. The other thing that I love doing with folks when they're going out and they're going, hey, we're going to look at a couple different properties, let's look at and see, hey, you know, what area? I can show you what it's based on, historical numbers. Hey, what house might be better for you to buy if you know, hey, this is going to be long-term, or I'm not sure, maybe 5 years. I could show you how quickly you could get your money back on down payment, all those things. So there's a lot of different things there. And an appreciation over the past 83 years. I mean, last year, again, it's between 5 and 6%. In 2023 was 6%. 2022 was 6%. Folks, these are all years when rates were in the mid to upper sevens, right? And then you look at in 2021, 19%, 2020, and all that kind of stuff. But, folks, the appreciation is still there even with the higher interest rates. That's why home ownership is, will, and will always continue to be a great place to have your money. It's a equity building tool. It is a long-term investment. Home buying is not a get-rich-quick scheme. Okay? It is a long-term investment. So I wanted to share that with you. When I get this kind of data, it's important because if some of you are just sitting there on the side, and I know, look, it's hard. When you call and you go, all right, hey, and you rate 699. I get it. Because your neighbor's bragging about that they got 3.25. It doesn't matter. Everybody's situation's different. You can't worry about what somebody else did. Hey, if you know, your neighbor might have been in a different situation than you were or are. And I always call that fence talk. You never hear of your neighbor having things worse. Your neighbor's the they person, right? They always catch the bigger fish. They always are the most popular. They use that word they a lot. So just understand and look at, for your situation, what is it? And if it's not right now, I get it. But let's talk about it, and that's why we're talking about the programs like we've got today. That's why a couple weeks ago when we had Sandy on and we're doing renovation loans, she came on, you should see the amount of volume we're getting on that. Because right now, how many of you are thinking about buying? There's a certain area you want to be in. The houses are limited, or it's just not the way. You can afford it, but you don't like the way it is. And you don't want to come out of pocket with the money. Well, that's where, at Mortgage Gumbo, that's where our renovation loans kick in. You can still put the same amount of down payment, but use our money to fix that stuff up. We had a guy call me last week having some medical concerns within the family, wants to move closer, and his daughter getting married, they're looking at buying a house. So, you know, they're trying to find houses where they're on the same block. So, got with the daughter and her significant other and discussed, what if we looked at doing a renovation loan, find a house that you like, that you want to fix up, and add an ADU, which is an additional dwelling unit, instead of you buying a $500,000 house, Dad buying a $500,000 house that you've got notes on, or even worse, Dad's a little bit older, you're exhausting all your cash. when you know you've got families with medical issues, that cash may come into play later on. I showed them. I said, you think you could find something in the 750? They can qualify for over $1 million. So sure. So guess what? They went out looking, found something in the 700, and this is just this example. Went and found something in the $750,000 range. We're going to give them $75,000 to do some updates and add an ADU so the family can live on the property in the back. And then you don't have two separate house notes, and everybody's where they need to be. The daughter, they're stepping up, wanting to take care of the family and all that. So those are the things you've got to have the ability to work with the team like we are, where we can show you out-of-the-box thinking, because there's programs out there. And a lot of you go, I just don't find anything. Hey, I want to live by family because, hey, mom, dad, that's free babysitting. I want to be in this certain market because Junior's 5, he's going to be going to school. This is the school district we want to be in. Awesome. Cool. So let's do this. Let's look at, if you know there's a certain area, but maybe that house isn't the way you want it to be, let's discuss that. Believe me, the person that's selling the house, they know if it's lipstick on a pig. They know if it needs work. They know if it's been sitting for 100 and something days. But now you could go in, make a good offer, get some closing costs paid, and turn that house into what you want. So keep that in mind, Gumbo Nation. There's a lot of opportunities out there, and that's why we're going to be talking about these unique programs over the next couple weeks. Construction loans, etc. So, all right, stick around on the other side of the break. We're still going to get to Rate Watch, and then we're going to talk about a DSCR loan. I'm about to make a lot of you very, very wealthy, become real estate moguls. Then you'll be all over the place doing your TikTok showing how you made money just by listening to Mortgage Gumbo. You listen to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
West is Sunday best.